Okay, good morning, everyone. It's the appointed time. Councillor Goldspeak, welcome to you. You're substituting, I understand. Smashing. Thanks very much. Welcome to the meeting. Okay, welcome. Thanks to officers and to the auditors for being here too. Thank you. So, to the agenda. Apologies for absence.
No apologies, Chair. Just as you said, Councillor Goldspeak is substituting for Councillor Bell.
I think we're expecting Councillor Fernando, but maybe there was a bit of roadworks outside which held me up a bit, so maybe he's got the same problem. But anyway, we'll start anyway, and if he arrives, well, he can join us. Okay, so item 2 on the agenda is declarations of interest. Any declarations? No. Okay, well, if anything comes to mind during the course of the meeting, we can note it then. So no declarations of interest. Chairman's announcements. Well, I don't have any, except that just to use the microphone when you're speaking, as this meeting is being webcast. And so item 4 is training item, statement of accounts. Alison, is that your? Oh, well, thank you very much indeed. Thank you.
Thank you, Chair. So this morning I'm going to do a quick run through of the statement of accounts and what's included within them. So we can have the next slide, please. So the statement of accounts give details of all our financial activities and our overall financial performance. They're prepared in accordance with the Code of Practice on Local Authority Accounting in the United Kingdom 2020-21 issued by SIPFA, which is based on international financial reporting standards. Members of the Audit and Governance Committee are not expected to be financial experts, but they hold responsibility for approving and issuing the Council's financial statements. The statutory deadlines for publication of the 2020-21 Statement of Accounts are shown on the slide. As you can see, we haven't met those ones, but we're not alone in that. Figures published late last year showed that only 9% of 2021 audits were completed by the deadline, which I'm sure you're all aware as we've mentioned this previously. So the accounts are made up of these key areas. So we have narrative statement, core statements, notes to the accounts, collection fund accounts, group accounts, and the annual government statement. The narrative statement provides information on the council on how the council has used its resources to achieve its desired outcomes. So included with this is the narrative is the capital and revenue outturn position for 2020-21, which have previously been presented to Audit and Governance back in September 2021. So just as a reminder, we were showing a revenue overspend of £116,000 and a capital carry forward of £33 million at that point. A new item that was included this year in the narrative statement was about the impact of the COVID-19 pandemic and how that's impacted the council in terms of additional grants that we've received and distributed and ongoing on our fees and charges income. Now on to the core statements. The first of the core statements is the movement in reserve statement. This statement shows the changes in the council's reserves from year to year. It's a statutory statement showing the financial position. Now, in this statement, we reverse out items which are charged to the general fund. The amount chargeable to the general fund is limited by statutory requirements and requires adjustment. So therefore, the MERS shows this moving between the accounting basis and the statutory basis. So an example of this shown in the line that there's adjustments between accounting basis and funding basis under regulation is where we remove the depreciation that's been charged to services. And we also remove and any entries that go through in respect of that the actuary has provided in respect to the pension fund, these are removed as well, as we're not required under statute to show these in the general fund. The next of the core statements is the comprehensive income and expenditure statement. And this shows all the income and expenditure received and accrued in the financial year. This statement is prepared in accordance with international financial reporting standards and shows the position before the statutory overrides have been applied. The CIES is shown in two parts. Now, on the slide now, we have the top half of the CIES. This shows the top part is the net cost of services, which is the income and expenditure attributable by service. The next part down is other operating expenditure, which shows payments, precepts to town and parish councils, and any gains or losses made on disposal of assets. The third part of this is financing investment expenditure, which shows all the interest that the council pays and receives, and the income and expenditure in relation to the council's investment activity. The final section on this part is taxation and non-specific grant income. This relates to income that we receive from council tax and business rates, and also any grants that we receive that are not directly attributable to a service. Bottom half of the CIES shows all other income and expenditure items that are not allowed to be accounted for elsewhere, such as increases and decreases in the value of land and buildings, and changes in actuarial assessments on pension liabilities. This then brings us to total comprehensive income or expenditure for the year. The third of the core statements is the balance sheet. So the balance sheet is a snapshot of the authority's financial position at a specific point in time, showing what it owns and what it owes as at 31st of March. This again is divided into two halves, which, as the name suggests, should balance. This slide shows the top half of the balance sheet, which details the council's net assets. Long-term assets show the value of, as at 31st March, of the council's long-term assets, including property, plant and equipment. These are the assets the authority uses to deliver its objectives. Also included are investment properties the council owns and long-term investments. The next subtotal includes council's current assets such as cash and short-term investments and debtors. These are items that in the normal course of business will be turned into cash within the next year. Current and long-term liabilities are those that the council is committed to meet in both short and long term. This also includes the estimate from the actuary to the pension fund for the cost of meeting the council's pension fund obligations earned by past and present members of the pension fund. The second half of the balance sheet shows the council's reserves. These are split between usable and unusable. The usable reserves result from the council's activities. These include the general fund, which is money set aside for emergencies or to cover any unexpected costs. Earmarked reserves, and these are shown below, and these are set aside for a specific purpose, so they'll be included in the budget report. Unusable reserves, and these are not to be used. These arise from accounting adjustments, and these include the pension reserve, the revaluation reserve, and the capital adjustment account. Yes, of course. Yes. Yes. So the collection fund. Yes. So that will have reflect the transactions that have taken place within the year.
It's a product, Chairman, of the fact that these are accounting entries that we put in and then we take out again through the MERS, which I always call the hokey cokey account, because we put it all in, we put depreciation in, put all the pension adjustments in, so our accounts are comparable with the likes of BP and BT, and then but because we have to put it back on the same basis that we charge council tax, we reverse all of those out. So we have a huge industry of actuaries valuing pension funds and valuers valuing buildings, and we have robust discussions with the auditors about how things are valued, and then they're wanting things to be revalued, etc., etc. So what CIPFA have done is produced this massive, great set of accounts, which is basically impenetrable to the public, and a huge industry paying hundreds of thousands of pounds out to valuers and accountants and actuaries. And at the end of the day, it all gets reversed back out again. So that's why you have these negative. In a company, you'd be deeply concerned about that. In a local authority, you don't need to be concerned because it's funny money, in inverted commas.
Yes. Yes, sorry. Well, I also don't understand that, because I would have thought the reserves would be something which you could use. But when it's negative, or even after all these calculations, why does it just not end up as being nothing, rather than still being a negative thing, which is not available for us to use? Does seem odd.
because in the balance sheet, in the top part of the balance sheet, there's either a liability or an asset, and it has to be balanced in the other part of the balance sheet, the finance by a correspondingly opposite figure. So if you've got a positive figure on up there, it's balanced out by a negative figure down there. So it comes to zero in the balance sheet overall, even though it's shown, but you can't use it. That's why it's an unusable reserve, because it's not actual cash that you've had from the council taxpayer. We're just doing these adjustments through here to satisfy international financial reporting standards. So we're taking international financial reporting standards, applying them to our accounts, and then moving it back out again, so it has no effect on the council tax. And you end up with these rather bizarre large reserves, which can go from a positive to a negative, you know, hundreds of millions of pounds movement in a year. We can have that depending on what, you know, for example, if you had council housing, which we don't, but, you know, the government can change the percentage of usage for existing use value for a social house, and you can move hundreds of millions of pounds in a single year. But it has no effect on the housing rents. It has no effect on the council tax, because it's, as I said, it's just funny money. It's a way of, we have to produce these international financial reporting standards accounts, and then we have to take it all back out again to come back to the same basis we charge the council tax. So these figures here you can't use, because they are literally accounting adjustments to just show our figures on an IFRS basis.
Thank you. I don't think I really understand it even now, but thank you for trying.
I'll have a go at explaining it to you after the meeting, Councillor Goldspink. How's that?
Right, okay, thank you. Thank you.
Thank you. And the next point to note is the notes to accounts support the figures included in the accounts. References to these can be found on the face of the statements to link you to provide more detail of the figures included. The last of the core statements is the cash flow statement. This sets out the council's cash receipts and payments during the year. Whilst these figures are included within the accounts, these are done on a cash basis, whereas our CIS and balance sheet are done on accruals basis. So the cash position is analysed into three sections. The top part is the operating activities. So these relate to all revenue inflows and outflows of cash during the year. The next section down relates to investing activity. So this relates to any transactions relating to assets. And the final part relates to financing activities, which relates to movements relating to precepting activities. So then the balance at the bottom of this agrees to the movement in our cash position as reported on the balance sheet between the prior year and the current year. Moving away from the core statements, we then have the collection fund accounts included within the local authority accounts. Now these show the transactions in respect of council tax and business rates. And we are, as the billing authority, are responsible for maintaining these accounts. The balances at the end of the year are allocated between East Herts, Hertfordshire County Council, the Police and Crime Commissioner with regards to council tax, and central government for business rates. So each of those authorities will account for their share of the balances within their accounts. And we as billing authority will include the debtors or creditors, show the amount owed or due to each of these other bodies within our accounts. East Herts have produced group accounts since 2019-20. This is to incorporate the financial activities of Millstream Property Company within our accounts. So we have to produce these in addition to our single entity accounts. They include the core accounting statements, which are similar in presentation purpose to the council's accounts. Any explanatory notes considered necessary to explain material movements are also included. Where no notes are given, the users of the account should refer to the notes that are included within the single entity accounts. And the last part that I was going to draw your attention to is the annual government statement, which hopefully you're all familiar with. This comes separately to committee to be scrutinised, and it sets out the arrangements that we have in place to manage and mitigate the risks that we meet during the course of business. The 2021 AGS was certified by Linda and Richard in April 2022. Is also included within the statement of accounts. Is any other questions?
Thank you. Yeah, there's a really nice sort of whistle stop, if you like.
Yeah.
But it was good. It was at a good level, I think, for us to you made it understandable, which is really good. Thank you. In terms of including things in accounts, I mean, maybe not certainly in sets of accounts I see, sort of ESG, environmental sustainability and governance issues are playing more of a role in mostly the narrative side of things, and also climate change. I know there was some reference to climate change in this set of accounts. Are we seeing obviously we're about 1 or 2 years behind? Are local authority accounts now having to include more references to climate change and also to ESG sort of matters? Are you seeing?
So I think for us, the accounts moving forward within the narrative statement, we will include more reference to those areas. I suppose Debbie might be able to comment if that's something she's seeing in other audits.
I think it's something that we haven't seen very much to date. So there's limited reference, I think, in accounts, but I think it's something which definitely will be coming in. So not necessarily for 21, 22 or even 22, 23 accounts, but I think in 23, 24, I think we will be expecting to see more. And certainly, as you say, in the corporate world, there is already a lot more commentary on climate risks in reporting within financial statements. So I think it is on the horizon. It isn't yet in the requirements for local authorities, but clearly local authorities have a role to play and are considering it. So I think it's something that will be helpful to be included going forwards.
Thank you. Thanks very much. Any questions? Oh, Councillor Alder, sorry.
It's simply to ask if I could have a hard copy of that because my device doesn't work.
Yes, of
Right.
course, that's fine.
Thank you.
Would anyone else like a hard copy? Sorry, Councillor Crofton.
Hello, I'm just wondering how we're treating the debtors and the aged debtors and bad debts. What have you provided for, and what are we doing? I know it's not an analysis of that particular problem, but it is a massive figure, and I'm just wondering how it's being treated.
So note 15 covers debtors in the accounts.
Yes, it does.
There's note 15.
I don't have the papers, I'm sorry.
Yes, so the chair said note 15 covers debtors within the accounts. All debts are reviewed at the end of the financial year and an assessment is made about the provision required to cover the potential collectability of those debts. It's an exercise that I'm starting to undertake now for the closure of this current financial year. Involving services, we do have quite a large outstanding aged debt currently.
Oh, it's massive.
Which is being worked on by officers with regards to its collectability, and that will reduce going forwards. But we have made provision to offset that loss of writing those debts off where they're not collectible.
I'm sure this committee is going to concentrate on that side of the business considerably as we go forward into the new term.
But we've got a meeting on the 28th of this month, and I think that, and we'd normally have a section in your report on debtors. I would expect there would be one for that meeting, and so we'll have a chance as a committee to think about where the current position is with regard to debtors. I know, Stephen, you and your team have got a project having to look at debtors because some of the debtors are quite old, and maybe it's not practical to reclaim some of this stuff. So you're looking at that as a project, aren't you?
Well, as in note 15, we've set aside 2.5 million to write off or uncollectible debts, and there is a considerable amount of debt that is very aged. I have a report which is going to the Chief Executive shortly, which is proposing an additional member of staff in finance, so that we'll have a team of 4. He will move between creditors, debtors, and income and cash management. And then we will allocate them a portfolio of debts with credit control responsibility. We will clear out the stuff that's not collectible so they can see the stuff that is collectible. And we will start concentrating on putting in place proper credit control management as well across the council. So there will be, finance will be doing most of the work. At the moment, it is devolved to service areas. And I'm not convinced that some service areas are doing anything at all. And we do issue a set of what's called dunning letters, which is just reminders and things like that. I want to change the language in those reminders. And use a lot of behavioural economics and nudge theory, because I've done that in a previous council and it does work. We'll be seeking to ensure that people pay before they have the service rather than paying after they've had the service. So instead of being billed in arrears, I want to move it to being billed in advance. And we'll put in place those things. But if this stuff's not collectible, it's not collectible. I will seek to use external credit agencies if possible to collect some of this stuff. But if it's just not collectible, it's just not collectible. There's not been, I've certainly not seen any write-offs in the last 2 years. And I suspect none have been done. So there'll be, I suspect, as I've said to members before, there will be a considerable write-off of this debt if it's just not collectible. But what we do when it's written off is we keep a note on the finance system. If these people ever pop up again, we will go after them.
In terms of writing off, that's a decision that's taken by the executive, is it?
I have delegated authority to write up to 50,000 per individual debt. But then it does need to go to executive. So there'll be a mixture of some of it being under delegated authority and some of it presumably going to executive. But until we've been through the exercise of trawling through every single debt and seeing what is and isn't collectible, I can't really give you a figure at the moment.
Will there be an update along the lines you've just discussed at our meeting later in the month? Is that too soon for that, or
there's not on the agenda at the moment, Chairman.
is it possible to add it to it or not?
As it's published on Friday, no, Chairman.
Okay, fine. I know there've been some comments by members about the level of bad debts within the council, and so it's something that we just need to keep a close eye on. And so there will be some reference to it in the papers, I guess, but nothing along the lines you've just discussed, I suppose.
I'm not entirely sure there's any reference in the papers, Chairman, from what's on the agenda.
Thank you. Mr. Crofton.
I think this was discussed at length at a meeting a month or 6 weeks ago, that we were going to appoint some debt collection agencies. And I did suggest you use somebody like LTA, who don't charge anything up front, and they put all their costs on top of the recovery money. They could take hold of they will take the whole debtor book portfolio, look at each one and go after them. It's not complicated. It is very, very simple. And they will recover it, and it's at no cost to this council. It's something we should do now, not next week, not next month, not next year. It's £2.5 million. Think about it. It's ridiculous. How can we lose that sort of money? We can't. Impossible.
Some of that figure is quite old. Well, anyway, you're thinking about options like, I guess that's kind of factoring or using collection agencies to help in this regard.
Well, at the moment, debts are devolved to service areas, and I don't have the authority to do this, which is why I've asked the chief executive in a report to give me the authority to do it and the additional member of staff. So I have to wait till I've got the authority to do it.
Well, I guess you're waiting for the chief executive to give it, aren't you? I mean, presumably you've asked for that. So Councillor Alden.
Well, I just can't believe that you haven't got the authority to go after these people. I find that extraordinary. I mean, where is the chain of command? We need to know that these bad debts are being pursued with all vigour. And it does seem to me that it's been a bit lackadaisical. And I think we really need to get a proper hold on it and go after them. As Councillor Crofton has suggested. Because it's the people who pay up and regularly honour their bills are losing out by the people who just disregard it and think they can get away with it. I mean, we have got that huge debt in Bishop Stortford. I mean, what's being done about that? And has that business gone completely out of? Is it now a non-business? You know, there must be ways of getting some return on that huge debt. So I just think you need to be a bit more vigorous. Thank you.
We as a committee contact the chief executive to say we've got a concern and we don't need to know what he's going to do about it.
Well, Chairman, since it used to be the responsibility of the Revenues and Benefits Service debt collection, and when it became a shared revenues and benefits service with Stevenage, it was devolved to service areas that they would be responsible for chasing and managing their debt. So each head of service is responsible for their own portfolio of debts. So it's not for me to say what other heads. If you want to ask other heads of service, then you'll have to ask them to come before the committee and explain what they're doing about their debt. I'm afraid I don't know what debt Councillor Alden is referring to, so I can't comment on it. But I have asked the authority to bring it into a centralised debt collection, and then we can get on top of this and make sure that it's being done properly and that we are pursuing debts and chasing them properly.
Maybe as a committee, maybe we should make representation to the chief exec. What, to contact the chief executive? Well, there has been some action. I mean, you have action. There is action in,
There's a report, and we're having a meeting with the chief executive next week to discuss it.
well, maybe we should contact the chief executive to say that we have a concern about the level of debt and this needs to be dealt with immediately. That's,
Yes. Thank you, Chairman. Yes, I would really support that. And surely in some of our papers, we are allowed to make recommendations. Yes, from this meeting. Yes.
well, depends what you mean, but.
Well, when we have to make recommendations about accepting the accounts or not, could we not add an extra statement? We're very concerned about the debts, and we would really recommend that our chief finance officer should have the powers to look at all the debts and to take action.
Well, that's what's been asked, and so we need,
Yes.
but we need to make sure that the chief executive action, or look at that now,
Yes.
rather than, yes, we need to, so we've got that as an action. So we need representation to the chief exec of our concerns about the level of bad debts, and also we need to ask him what he's doing with regard to the report. Stephen then has given to. That's all.
Mr. Chairman, I did understand from the meeting, I think probably the meeting before last, we were very concerned about this, that finance were going to take all of the debtors into their remit rather than individual.
Well, that's what there's just.
I know, but I understood that it was actually going to happen 2 months ago, and it seems to me that it hasn't happened yet.
Well, no, you're
So-
it hasn't happened yet. No.
No,
We know that.
but we were told that it would be actioned, and I certainly was under the impression that it was now all within the remit of the finance, and
Well,
all the outstanding debts in the different departments were all going to be gathered into the remit of finance. As clearly that hasn't happened. What we're now asking for is that it does happen. Is that my understanding, members?
We need it
Yes.
to happen.
But
in
it
a
didn't
time-
happen when we were told it was going to.
And I don't recall that was the case. Maybe you're right. I don't recall about what was discussed about timing. Certainly, we were told it was going to happen, but I don't recall.
But it
exactly
hasn't
when.
happened.
No, it has. We know. It has not happened yet. No.
But sorry, Mr. Chairman,
Mm.
but my understanding was that because we had recommended that it would happen, but it clearly hasn't happened, and we're now asking for it to happen.
Yes, yeah.
Months go on and these debts go on rising, and the people that we can target to get to recoup monies
Mm.
will disappear
Well,
and have disappeared.
there is a plan. What we need to make sure though that it happens in a timely manner rather than down the line. So we need to raise that this committee is concerned. The plan is there, and the plan, if it happens, then that's what we want to happen in terms of all the debts coming in within the responsibility of the finance team. But we need it to happen. We need it to happen sooner rather than later, don't we? Yeah. So that's what we need to make. We need to make sure that the chief knows that as a committee, that's what we want to happen. Right. If there are no more questions on this item, thank you very much, Alison, for your presentation. We move on to the next item, which is the external auditor's results report, which is in the pack. Which begins on page 5. Stephen, do you want to begin, or do you take, or Debbie, anything? We've got a preamble that you've written, haven't we, which was useful.
Chairman, you're asked to receive the external auditor's audit results report. The report is the external auditors. It's for the external auditor to speak to it and give you a fuller flavour of the audit. My preamble report is merely setting the scene and reminding you that you received in April 2022, when we were in County Hall at Hertford. We received the interim audit results report, much of which is repeated in this report, but I'll leave it for Debbie Hanson from Ernst & Young to speak to her report.
Thank you. Debbie, thanks very much.
Thank you, Chair. So as Stephen has said, we obviously presented a provisional audit results report nearly 12 months ago now, which obviously is not ideal from anyone's perspective. And I guess Stephen's cover report explains some of the background to what's happened since then. So there were some issues emerged. I think one of them we did flag at that meeting, which was in relation to an error that had been made by the actuary in relation to the IS19 reports for all of the Hertfordshire bodies. So it took a little time to resolve that. We then basically had further issues that we identified during the audit, which are outlined in this report. So there were a number of errors identified, which we had to work with the finance team to resolve, some of which impacted on the prior year financial statements. That obviously then has a more significant impact in terms of having to agree the impact of those, how those are worked through the financial statements, the finance team putting those adjustments through, and then we also have to consult internally on any such adjustments. Linked to that, obviously, then the going concern assessment has to be updated to cover 12 months from the date of the audit report. And we're very conscious that that was then putting pressure on the finance team in terms of other pressures that they were dealing with at that point in terms of setting budgets, other issues, etc. So I think we've worked together in a constructive manner to sort of manage the completion of the audit. It's obviously taken longer than I think either of us would have preferred. But we fully recognise the pressures that your team have been under, and also the resource pressures that our team has been under, which meant that, you know, we can't always just pick up things as and when they're resolved. So we've worked through, I would say we're now in the very happy position that you can hopefully approve the accounts today. And then once I get back into the office, I will just do our final checks on those and then be in a position to issue an unqualified opinion on the financial statements and also an unqualified value for money conclusion.
Can I just ask you, you mentioned about COVID, and in the executive summary, you mentioned that you identified an increased risk around the completeness, accuracy and appropriateness of the information produced as a result of COVID.
Mhm.
I just wondered if you could explain a bit about that, or maybe you will do in a bit anyway, but I just...
I wasn't going to particularly dwell on, but I can pick that point up. So for all of our entities where we used to come on site and do all of our audits, in one of those rooms over there, we'd be ensconced for 4 to 6 weeks.
So how much time did you spend on site? Because I know in the corporate world, it's less and less, auditors are spending less and less time on site, and it's all done via either the client uploading stuff onto a portal or through analytics, essentially.
So for 2021, I don't think we came on site to do any of the work. For 21-22, we have discussed with Alison and the finance team, and I think that we have agreed we will come in, and we've already started doing that for 21-22, which has already started. So the whole of the audit was done remotely, which I think worked incredibly well compared to how quickly we suddenly had to move from being on site 100% with clients and finance teams to suddenly doing everything remotely. I think technology helped us do that, so we were able to use the Teams facility to screen share, etc., and obviously have lots of Teams calls and those sorts of things. But it still does not. It's not the same as being in the room with somebody and being able to have a face-to-face conversation and just to pop around the corner and ask a question. But you're referring to information produced by the entity. So one of our key tests that we do, anything that we receive from the council as part of the audit, we have to test it for completeness and accuracy. So we're checking, is the report that's run, for example, does it have the right parameters? Does it exclude information that should be in it? And is the information that's in it accurate? And does it represent what we think it represents? So one of the things we do for that is, again, we use that Teams facility to kind of observe reports being run, so we can check the parameters. We can check that the report that's actually produced is the report that we expect it to be. And apologies, that's an alarm going on my phone for some reason. I thought I'd put that on silent. So that's basically I had to put it on silent, so it's not my phone. Just sounds like my phone. So that's basically the additional procedures we had to undertake to make sure that the information we were testing from was the information we thought it was.
Those additional procedures, are they reflected in your proposed fee for this audit? So you felt that you had to do some extra things, which obviously took up more of your time, and obviously it reflected in your fee proposal.
There would be some reflection of that. So in the final fee that we put forward to PSA, there will be an element that's related to kind of COVID impact, and that will include an element related to that. I wouldn't say that was significant, but it is, because it's something we check anyway, but normally we do it kind of sitting down with somebody. So the difference is we're doing it remotely. So it produces, there is definitely inefficiencies, I think, from having to work 100% remotely. Things don't get finished as quickly and they're harder to conclude on. So there's a general cost, I would say, from COVID.
And to be clear, you just said the audit was conducted wholly remotely for this set of accounts.
It was, yes.
Thank you. Great.
So I guess that's the the background. So I wanted to express thank you to the finance team for the perseverance through the audit, and we are there now and we're in a positive position.
Yeah, I wonder, as a committee, I think we'd like to thank the finance team as well. I hope you'd agree that for Stephen and his team's work for this auditing this financial year, because it must have been dreadfully difficult for having to do this, and all the other things you had to do, and closing out the years down and budgets and all that. So I think we'd like to thank you for your hard work as well. If you could make it true. Thank you.
Okay. No, that's fine. That's fine. I don't mind interruptions at all. The only thing we can't issue for 2021 is the certificate of conclusion of the audit. And the reason for that is that the WGA instructions have been issued, and as we would expect, East Hertfordshire is below the threshold that requires us to perform audit procedures. However, for 2021, the NAO has now determined that it wants to sample test a number of bodies that are below that threshold. I assume to provide greater assurance on the overall WGA process. But what they haven't done is basically shared those sampled components yet with auditors. Therefore, until they have concluded that and said this is the full list and we've given all the list, we don't know whether we have further procedures to complete with WGA. We don't know if we're a sampled component. Therefore, we can't say we've discharged all of our statutory responsibilities under the NAO code, because that is one of our responsibilities. There's no significant impact for the council in terms of the objection period is closed. So it used to be that until the certificate was issued, you could receive an objection. There's no impact from that. The only issue is that at the point we reissue the certificate, we have to consider whether there's anything significant occurred between the date we issued our opinion and when we issue our certificate that we need to refer to in that certificate. We don't know when we can do that, but we will obviously undertake that consideration when we do it. I'm not aware of anything that would particularly impact on the council's position at March 21, but clearly we just need to do that when we issue the certificate.
And this one affects your opinion in any way?
No.
No, thanks.
Okay, so if I can take the members of the committee, as it was a long time since you received the report, I won't take you through every page, but I'll take you through the executive summary and then just the audit differences. So the executive summary starts on page 14. And we identified in there that some changes from the initial plan that we produced. So we identified grant accounting, which was particularly linked to COVID because of the additional level of grants that were received in 2021. So we identified that as a new risk in terms of our audit focus on, in terms of checking that those grants were correctly classified as to whether they were grants for the council's funding or whether you were acting as an agent in effect and passing those grants on, and that drives the accounting. If they were grants that related to council activities, did they have conditions attached, and if so, were those conditions correctly reflected in the accounting? We actually removed a risk that we had around the calculation of minimum revenue provision because the council no longer proposed to make any changes to that, and that's what had driven that risk. We revisited our materiality and confirmed our materiality level at just under 1.5 million, and then our performance materiality, which is the level we perform the testing at a slightly lower level of just around 1.1 million. So in terms of the status of the audit, as I've said, we're complete. We have completed our value for money work, as well as I've noted. We did not identify any risks in relation to value for money, and therefore have no matters to report in relation to that. The next section of the report has the executive summary, has the audit differences on page 16. Rather than take you through those, I'll take you through the more detailed pages that have the audit differences a little later in the report. And then I'll also take you through some control observations that we have included later in the report. So if members could look at page 17, which is where we highlight in a table the key risks that we identified and our findings and conclusions. And I'll just take you through quickly through each of those. So the first of those is the general risk that we have around misstatements due to fraud and error. We've completed all of our testing in that area and have not identified any issues. We also identify specific risk around incorrect capitalisation of revenue expenditure, and that also includes revenue expenditure financed from capital under statute, which is a very long name, but we call it REFCUS. And again, we didn't identify any issues from that testing. In relation to valuation of property, plant and equipment, and also investment properties, we did identify judgmental difference on the value of the Charrington's house, which is included in the council's other land and buildings. So in our view, the value of that asset is understated by 354,000. That is a difference in opinion, I think, probably between the council's valuer and our valuation specialists. Therefore, management have not corrected for that error. It is not material. And therefore we will ask management to include that in the letter of representation, which they sign to explain why that adjustment's not been made. And we have also identified classification error between property, plant and equipment, other land and buildings, and also assets under construction of around £500,000. And that's a factual difference, and management have corrected for that. In relation to going concern, the council has provided us with updated going concern disclosures, which we've looked at. They cover up to the end of March 24, along with cash flow projections, and we're satisfied that it's appropriate for the accounts to be paid on a going concern basis, but also that the disclosures in the accounts around that are appropriate. And that's really the key thing, because local authority accounts are prepared on a going concern basis. It's more around the disclosures that are important. In relation to pension liability valuation, as I've noted, there was a Hertfordshire-wide difference in relation to the Hertfordshire Building Control. So that's the second paragraph in that section. And that also impacted on the prior year figures because the error impacted on both of those years, and that has been adjusted for. And that's around 2.5 million in each year. And then also there was a difference between the pension fund assets, between the initial estimate provided by your actuary and then the final year-end asset valuations. The council share of that is 238 million, and management have therefore not corrected for that.
238,000.
Sorry, 238,000. Yes, yes. Thank you for correcting me there. And therefore management not corrected because it's not material. And it's a change in, it's just more information that has come to light since the accounts were produced.
So that's just not been amended because it's not material.
It's not material, and it is just more information that the council prepared the accounts on the best information they had at the time, based on the actuary's estimates. The final asset values differed slightly from those assumed by the actuary, and that's given that sort of difference in the calculation. So that updated information doesn't indicate that the estimate was materially incorrect, and therefore management have not amended for it.
Unadjusted order difference as well then.
Yes, so that will be in the letter of rep as well.
Right.
So on the next section of the page, so we've got some further areas. So we've got page 18, we have business rates appeals provision. There was an error in the specialist calculation, so that's not an error that the council has made. You employ external specialists to prepare this calculation for you, and they had an error in their formula which applied to a number of bodies. So this was picked up in a number of places, and that resulted in an overstatement of your appeals provision of 2.4 million. At an all preceptors level, so the council share of that was 966,000, and that has been corrected for in the financial statements. And then group accounting, we identified an error in the cash flow statement for the group, which was around 2.7 million, and again that's been corrected for, and there was a few minor disclosure errors as well in relation to the group accounts. In relation to the additional risk we identified around COVID grant income, we did not identify any issues in that area, so there's no items to note. So those are the main issues. I think it's probably just worth taking through members through page 34 of the report, which has all of the corrected audit differences going over those 2 pages, and then the uncorrected differences on the subsequent page. At 34, that starts on. So it's section 4 of the report, page 34. Members at that. I won't necessarily take you through every single one of these differences, but I think I just wanted to bring it to your attention because, as you'll see, there are quite a large number of differences there.
I noticed that, and Stephen, you and I spoke about it, but I think a good number of them are outside of your control, this council's control.
Yes, but there are also some errors that have been made in relation to classifications of PPE, debtors and creditors. The NNDR appeals was clearly outside your control. The pensions issue was outside your control. The group cash flow clearly was an internal error. I think one of the main areas we did identify was in relation to PPE, which was where the council moved a number of years ago to revaluing all its assets every year. And as a result of that, what should happen every year is that you write out the accumulated depreciation for those assets, because you're revaluing them then, so depreciation starts from zero again in effect. That wasn't happening because I think what had happened was the old kind of practice when they weren't revalued every year was kind of kept in the accounting. So that did result in sort of quite a big adjustment, and also that had to be adjusted in the prior year. So the accounts have now been amended for that. That should be okay going forwards.
So does that, as a change in procedure now occurred as a result of that? Obviously, going forward, it'll be accounted for in the correct way.
Yeah, it was accounted for correctly. The presentation in the statement of accounts was incorrect, but the actual procedure was correct. We were following the correct procedure. It was a presentation issue rather than a,
So, so I should have made clear, it doesn't impact on the figures in the balance sheets, which are correctly reported. It's purely the disclosure in the note and how it's presented in the note. So no impact on the sort of financial position of the council. And it's probably quite a technical accounting area, I would say. It's probably one that not every council gets right.
Well, it's good to note that, isn't it? Good, thank you. That's good. That's a good explanation. Thank you.
We did also note a disclosure again in relation to leases, where basically the incorrect lease period had been included in the schedule, which shows kind of future lease payments. So that resulted again in a prior year adjustment of around 22 million and adjusted in the current year.
Yeah, there were 2 or 3 prior adjustments in the accounts, aren't there?
I think there were 4 in total.
Yeah.
We had,
Yeah.
yeah.
sorry, for the leases, again, it was a disclosure issue rather than an accounting issue. So our accounts the balance sheet hasn't changed for that, but our disclosure note has been adjusted to reflect that.
Thanks for that. Thank you.
Thank you. So probably the other difference or change to the accounts that I wanted to bring to your attention is on page 35, and that relates to a national issue around accounting for infrastructure assets. The council doesn't hold massive amounts of infrastructure assets, but they are above our materiality on a gross book value basis. They're not material on a net book value basis. But basically what that means is authorities were generally not writing out gross costs and accumulated depreciation when spend was being incurred on infrastructure assets. This particularly relates to highways, where it's quite problematic in terms of, you know, is a component being replaced, is it a new asset, etc. So this is a national issue that's picked up and affects every authority that's got infrastructure assets and in particular highways. This was worked through the whole of last year. And as a result, there was an adaptation to the code that was issued and also a statutory override, which allowed councils to basically report infrastructure assets on a net book value basis rather than a gross book value.
Could you just explain what the difference is between net book and gross book value?
Yes, so the gross book value is before depreciation. So you'd have the gross book value, then you depreciate something that reflects kind of the useful life of the asset, and you write it down over that useful life, and then you come to the net book value, which is reported in the accounts. So there was no issue with the net book value in any of the council's accounts generally, but it was that the gross book value was being overstated, as was the accumulated depreciation, as those 2 elements were not being written out. We didn't do a great deal of work on this with the council to determine whether you were fully compliant or not, because to do that we'd have had to go back to 2010 and work through a lot of records. So I think the council and us in discussion determined that you would adopt the statutory override, which would mean you just in effect take infrastructure assets out of the main PPE note and just report them separately on a net book value basis. Yeah, and this adaptation is in for a number of years whilst a more permanent solution is found to this issue. So the council has made those changes and we're comfortable that that's appropriate and that the disclosures in the accounts to reflect that are in line with the guidance that's been issued.
Can the statutory override provision only work until 24-25?
Because technically the accounting is not fully IFRS compliant, which is why there had to be a statutory override to allow councils to do this and a code adaptation. So it's very much a temporary solution whilst the sector, I think, looks at a sensible way to account for infrastructure assets. And as I said, this mainly impacts on highways authorities, where it is a real challenge in terms of how this is reported on in an appropriate way, which is IFRS compliant, but authorities can comply with.
In terms of the infrastructure assets that we own, what do they refer to? Because it's clearly not highways.
There's a few bridges and some footpaths and things like that.
Okay, thank you.
Okay, so the last section I just wanted to refer you to was page 43 of the report, and that just is our section where we report on any control issues. So we don't actually test controls supporting the financial statements because we undertake a fully substantive audit, which means we test individual transactions and do those procedures. But we do report anything that we become aware of during the audit, which we think the council may want to look at in terms of strengthening processes. So we've highlighted there the operating lease point, which just basically sort of suggests that the council has a monitoring of the active leases through the year to make sure that you're kind of pulling that information in correctly to the disclosure note. But as Alison said, it's purely the presentation and disclosure. It doesn't impact the figures in the actual core financial statements and not the primary financial statements. It's a disclosure point only.
Because here you do say that the council, for instance, under property, plant and equipment, the council should perform a review of its accounting policies and confirm they're in line with the code. So it's not a policy issue, though, really, more a presentation one. So do we think we need to undertake any review here, as mentioned in the auditor's report?
We review the accounting policy yearly when we're preparing this, the accounts, because that's what the accounts are based on, the policies. So we will make sure we're checking that we're in line with everything we need to be at that point.
Thank you. And also under infrastructure, it talks about the council may need to have more detailed records to report these balances on a basis other than the net book value. Again, is that something you need to look at?
Okay. It's on the very long list, yes, of the things that we need to look at. It's something we're aware of, and obviously we're aware of the statutory override and how long that lasts for. So it's something that we'll be following closely to see what we need to be doing in the future.
Thank you.
And the final point we just note on there is when we did the consistency checks on the prior year, we found that there was actually an inconsistency between the expenditure and funding analysis and the CIS. So again, that was corrected as a prior year adjustment. And obviously we're just flagging that in terms of just making sure there's a further check of the accounts to make sure that there aren't such errors creep in. Recognising that the accounts are a very, very long document, there are very, very many notes in there and disclosures. And I wasn't planning to go through anything else on the report, but I'm very happy to take any questions or comments and look forward to signing later today.
Thank you. I thought the report was really, and I did take the time to read it, and I think it was a really good report. Thank you. In terms of, I guess, inevitably, going to your fee, we talked about this earlier in the meeting, didn't we? It's on page 49 of the pack. So we've got obviously the base fee, and then we've got some additions, haven't we? Changes in work related to the address of professional regulatory requirements, and additional work, which is the risk related stuff I think we talked about earlier. So I guess that was it. The PSA will look at that, I guess, and see if we come back.
Yeah, I mean, PSA are required to determine all of the fees, so we submit them with a detailed breakdown on a line-by-line basis of the number of hours. They are then charged at a standard rate that PSA set per the hours, and that's how we derive the proposed additional fee, and they will determine on that. I
think it's fair to say local authority audit fees are going up, aren't they? I think because, for instance, in the corporate work, I mean, the amount of work you need to do on this, I would say that a fee of about 80, 90, 100 is about right. I don't know what maybe it's only my opinion, but you think, wouldn't you? I mean, certainly for a company, sort of complexity, I think you're looking for a release there.
And that is why we kind of proposed an increase in the base scale fee, because our view is that the base scale fee has just not kept pace with the level of work required and the complexity of local authority accounts. So, you know, if I compare the work I'm doing now on a set of accounts compared to what I was maybe doing 10 years ago, it's not comparable at all, the level of complexity and the expectation of the regulators in terms of what we do around things like pensions, property, plant and equipment, is significantly more work that used to be done, and those fees have just not kept pace with it, hence the proposed interest increase to the base on an annual basis. And also, as you say, the fees that are in 23-24 under the new PSA contract are significantly higher following the procurement exercise.
Thank you. Stephen, do you have anything you want to add?
I'll just add to that. These audits were procured by PSAA competitively, and these were the fees that were bid. So
exactly, we're all where we are, but I mean, it means the amount of work you have to do, you can't be expected to do that, carry out that sort of work for that sort of fee, in my view. But that's outside of all of our control, isn't it? I guess. Sorry. Anything else you wanted to say? We've got the rep letter, haven't we?
You have, I think, Councillor.
Oh, I'm so sorry. Did you have a call?
It's through you, Mr. Chairman. For Stephen, this in reviewing the policies and procedures, is or are you confident, Stephen, you've got enough staff to carry out these this review in a timely manner?
And my report to the chief executive also includes a bid for additional resources in finance in order to undertake this work. So as well as dealing with the debt issue, there's a request in there to restructure the service to provide additional staff at finance officer and a group accountant level in order to make sure that we can produce the accounts. Because it is a considerable amount of work. It's a huge amount of work. It gets more complicated every year, and it gets more and more irrelevant every year, in my opinion. Infrastructure assets is a massive exercise in accountancy for what benefits the taxpayer at the end of the day? Absolutely nothing whatsoever.
It's a good question, Councillor, although about staffing, that's a good point, but you've obviously raised this again.
Yeah, I mean, it is common across finance department, local authorities across England. We are consuming more and more resources to produce more and more pointless accounts. And it's a juxtaposition that CITFA have not dealt with. We spend a huge amount of time valuing assets and then we reverse it all back out again. And I question the value that we spend all of this money with actuaries and valuers. We spend a huge amount of time trying to produce these accounts. The auditors spend a huge amount of time auditing them, but what value to the taxpayer are we getting? And the profession has been saying to CITFA, we really need to have a simpler set of accounts that we can produce that people understand. An NHS trust on average will have 15 pages in their accounts. We're 150 something, and it's just getting longer. And it's adding no value whatsoever. And the infrastructure, I mean, basically the reason they gave a statutory override on the infrastructure is because every highways authority said, oh, just qualify us. We can't be bothered with this now. This is pointless. And that's what was going to happen. They were going to qualify every single highways authority because they just couldn't do it. And we've got footpaths and bridges, and that's a hell of a amount of work to go back to 2010 and track it all through. If you're Hertfordshire County Council and highways, you'll probably just take the qualification because it'd be a hell of a lot cheaper than you actually going and trying to do it and probably never get there. Because not everybody has records of, what A roads they did or didn't do. So I do question sometimes why we're producing all the stuff we're producing, because I struggle to understand some of it.
Come back, Chairman.
Of course, thank you.
I think from the members' side, we'd rather that concentrated on recouping the losses, because that will bring us in revenue. The properties, although it's important to record the value of them, particularly if we want to sell something, because that would make a difference to how we might view a particular situation. But I think certainly from my personal point of view, I'd much rather that you concentrated on recouping the money from the debtors, because that brings in real money. The other one is, in a sense, a book record.
Point, but I don't think you need to have enough stuff to do what you need to do, don't you? So that's part of what you're asking.
I'm sure the committee aren't suggesting that I don't produce the account. I produce accounts which are
I'm
immediately
sure,
qualified.
I'm sure that's the. I think you might suggest. Thank you. So, Debbie, thank you very much indeed.
I think you were referring to the letter of
on
rep.
the rep letter. But is now the time to us to think about that? I mean, there are some in the. I mean, it looked fine to me. There are some square brackets and things in there that would need to be in the version that you sent to us. For instance, on page 53, on section 5, it needs to be finished off because it's got to specify at the very end of that top paragraph under item top left.
Yes.
Is it changed?
Yes, I've got a revised copy of it.
Oh, fine.
Which
That's just the
I've got
version that
my
came out in the
headed
back.
paper,
Maybe,
so,
yeah.
yeah.
And then there's some square brackets on there where it refers to various notes in the accounts. So they've been added in as well, I guess.
Yes.
Yeah, this is just, we include the draft in the audit results report so that members can see what's going to be in the letter, but then obviously the final one is produced when we're about to sign.
You're subject to those. I mean, I didn't have any comments personally on it, but subject to those being sorted out, I think it's fine. So do we need to approve the letter now? So so we've got, so on page 100, no, it's not, it's 52. Because on page 52, which is appendix A in the pack, it's the draft management representation letter. So we need to receive it and approve it for signature. Oh, it's part of that. Sorry. So we go back to the recommendation. I beg your pardon. Yeah. Yeah, I'm so sorry. Yeah. I got carried away, didn't I? Page 5. So on page 5, sorry, of the pack, the recommendation is, having gone through all this lot, is that we're receiving the external audit results report for 2021. Are we happy to receive the external audit report? Is that okay? So, Councillor, are you happy to propose? Councillor Fenner, you're seconding. So all those in favour of receiving the report? Thank you. That's unanimous. Thank you very much. Sorry about that confusion. So I was part of that. Then we've accepted the representation letter, which we will sign at a later time. Fine. Okay. Thank you. Okay. Having done item 5, then we now move on to item 6, which is the approval of the 2020-2021 statement of accounts, beginning on page 58. So, does there need to be any?
Chairman, I ask the committee to approve the 2021 statement of accounts, please.
Right. I'm sure everyone's read these. Any comments on the accounts before we approve them or not, as the case may be? Any? I had some very minor stuff generally. Nothing, I don't think, that's going to affect whether we approve them or not. But I'd be happy to share my minor comments afterwards. I don't think I had anything. Did anyone else have any things I wanted to raise? I mean, things like these the pie charts, the expenditure and the income streams. I wondered if it might be better you could order them in sort of highest to lowest rather than. Again, it's a presentational thing rather than anything that detracts from its being right or wrong. What else we got? And things are on the pie charts. It'd be quite useful to have the percentages rather, see what the actual numbers are. I don't think I had anything else really. So quick. I'm sorry. Was it all? On page 101 of the pack, this is not. Again, this is not. This is the infrastructure assets policy. At the very bottom there's 13 million England or 24L Wales in square brackets. Is that supposed to be in square brackets? You see, the very sort of in the first line of the very last. But I mean, I'm sure it's not important particularly.
Well, Chairman, it'd be regulation 30M because we're in England.
I see. So he just said to delete.
So it's regulation 30M of the Local Authorities Capital Finance and Accounting England Wales Amendment Regulations 2022. So we can take out all 24L Wales
and just take the square bracket out.
Yeah.
But again, it's not. On page 114, which is the unusable reserves note. Again, this is probably, you see, what we're talking about, we're sort of third of the way down. There's a table which balance says at the 1st of April. Is there anything, is sort of there's no sort of nothing in the 2021 column? Should there be any sort of dashes there or anything? Was it do we just leave it blank? But that's there, it just sort of, there's no sort of dashes. Again, it's probably not material, and I can talk about it afterwards maybe. Is that supposed to be empty? And similarly, the table beneath it, and as you go down, there's just kind of gaps. Anyway, I'll talk. I don't think I had anything else. Sorry. No, that was it. Apart from some minor things, I can just talk to him afterwards. So I don't know if anyone else has got any comments on the accounts, so. What was the recommendation? Page 58 is where we need to go to if we have to do that. And the proposal is that we approve the 2020-21 statement of accounts. Are we happy to do that? So Councillor Crofton is proposing, Councillor Alder is seconding, all those in favour? That's unanimous, so we're very happy to approve the accounts, thank you. There are no urgent items that I'm aware of. So subject to there being no other points, I just might add while we're here, the main takeaway from this meeting is that we're going to contact the chief executive or make representation of the chief executive on following Stephen's report or request to him to see where we are with that, and we are requesting to look at that as a matter of urgency. Is that okay? Yes, that related to the data point. That's certainly the big take. Yeah, it's certainly, and yeah, absolutely. Okay, on that basis, that's what we need to do with that. On that basis, then I think the meeting's finished. Thank you. Thank you very much for coming, members. Thank you very much indeed for coming. Thank you.